All right, technical analysis. This is going to be a series of lectures where we're going to be talking about shapes, patterns, stuff that we see with TA and we apply while we're doing day trading or swings, whatever it is we're doing in the stock market while charting. So today's episode is going to be on wedges. And before we get into it, if you guys could drop a like and a sub, it helps out the channel. Let's get into it. So what is a wedge? A wedge normally takes place around 10 to 50 trading days. It's sketched by converging trend lines, and a slant to the upside is considered bearish. A slant to the downside is considered bullish. We're going to go over a couple examples so you guys can see what I mean by that. And volume is very, very important because it's key to the breakout or to the breakdown. Finally, the accuracy is well on par for forecasting stock price, meaning that there's a high percentage rate of success when using a wedge pattern. So what are the four types of wedges? We're going to start this off with the uptrend falling wedge. And as you guys can see, we have the uptrend over here. This is the falling wedge. It's pointing downwards. Usually we see an asymmetrical triangle. And as you guys can see, we start to contract. We get this cone shape over here. And then we have a breakout. We want to see volume. If there's no volume to support this breakout, it means it's probably not sustainable. Next is going to be a downtrend falling wedge. As you guys can see, we're coming down from the downtrend. We have the cone shape over here. We start to contract and then we go to the upside. So both of these are considered bullish. And as you guys can see, both wedges are pointed downwards. Now let's talk about some bearish wedges, starting with the uptrend rising wedge. So here's the uptrend. We see the cone shape. And as you guys can see, now we start to contract. This is the support line. This is the resistance. And then finally, we get to a point where we end up breaking down. And then this is considered bearish. So this is an uptrend rising wedge. Now we're going to be talking about the downward rising wedge. And then we see the same thing, except we're coming downwards from a downtrend. We see the cone shape, asymmetrical triangle, right? We start to contract, and then we break downwards. So volume is key because using volume, we can predict whether or not these breakouts or breakdowns are sustainable. So both of these rising wedges are considered bearish, and these wedges point upwards normally. And then the wedges that point downwards, which are falling wedges, are considered bullish. That being said, we're going to go over an example that I'm seeing in QuantumScape, where a wedge is being formed, and we're going to use it to try to predict where the future price is going to go. So I got the 1-day chart pointing up, and this is how I normally go about drawing it. So we're going to have a trend line open over here, and we're going to start this off by connecting this line over here, following by where we're seeing a lot of support, where we're seeing a lot of the bounces happen. Next, we're going to do the resistance, where we're seeing a lot of resistance happen. And we could go like this. As you guys can see, we're seeing a lot of resistance over here. So first things first, what kind of wedge is this? As you guys can see, we're coming down from a downtrend. And then we start our wedge formation. We're seeing this cone shape. We're starting to contract, right? Now we've been going downwards. However, I am expecting a breakout to happen soon. So now going back to the chart, this one fits, as you guys can see, the downtrend falling wedge. Alright, so now that we classified what kind of shape we're dealing with, I'm going to show you guys how to predict where the breakout is heading to. So what I like to do is take the trend line, and what we're going to do is take the first resistance, draw the line straight downwards till we hit the support. So this is going to be our guide to where the breakout will lead to. Now let's say hypothetically we see that breakout around this level. What we could see based off of our guide, we'll be heading to around the $50 to $60 level. Now this doesn't have to happen, especially if there's no news or catalyst that justifies this breakout. What we could see is possibly a lot of volume kick in, we get a nice breakout, but it won't be sustainable if there's no news or any catalyst, especially on a stock like QuantumScape, where the fundamentals aren't there and it's just based off of speculation. In that case, you want to take profits way earlier. However, if we do see the news, we do see the catalyst, then we can hold on a little bit longer because it justifies that movement to the upside. So always take note, when you do see a breakout, What's the volume doing? And is there any news or any catalyst that just came out? That being said, hope you guys enjoyed this video. Drop a like, drop a sub,